Escalating trade tensions between the U.S. and China. Now, China is weighing a potential antitrust probe into Apple's App Store practices. That's according to the latest out from Bloomberg. This coming after the country retaliated against U.S. tariffs with levies of its own and a probe into Google. Joining us now, I want to bring in Jason Furman. He's a professor at the Harvard Kennedy School of Government, former chairman of the Council of Economic Advisors under President Obama. Jason, it's great to have you back here on the program. So we're starting to see, it looks like at least, this emergence of a tit-for-tat trade war, trade dispute here between the U.S. and China, at least. And then when you factor in the back and forth between the U.S. and Mexico and U.S. and Canada earlier this week, I'm curious your assessment of how this has all played out so far, and maybe the risk that this trade tensions or strategy still poses to the economy.
Yeah, so it's hard to disagree with the Wall Street Journal editorial page, who called the Canada and Mexico trade war the dumbest trade war in American history. I'm glad to see the president pulled back from that. He got nothing from Canada and Mexico. He just seemed to have changed his mind. But that's fine. We're in a better place now. China, people don't appreciate the scale of what the United States has done. For better or worse, President Trump in his first 2 weeks put tariffs on China that were twice as large as what he did in his entire first term. He waited 18 months. He started with $40 billion. Here he's starting with $500 billion of imports that are being tariffed. So this is a significant escalation vis-a-vis China, even if it's not coming with the same fireworks that it did in his first term.
How much more difficult do you think this will make it, Jason, for U.S. companies to operate in China?
I mean, there's already been an increased process of delinkage between the two. This certainly will further that. In the past, when we've seen negotiations over tariffs with China, they've tended to be about how not to increase the tariffs further, as opposed to taking back any of the existing ones. That's broadly what I expect to see here. Moreover, you look at China's retaliation. You were talking about it right before we started talking. The investigations they're launching into American companies. That's not rule of law. That's not neutral treatment. And that makes companies think twice, 3 times, 4 times about doing business in a country.
Is it bad overall for business investment?
I think broadly speaking, yes, it is absolutely. Uncertainty isn't good. I mean, the first thing businesses worry about is uncertainty. There's just much more uncertainty now vis-a-vis whether the Canada and Mexico ones will come back, whether they'll happen with the European Union, what will happen with Taiwan, other countries around the world. And yeah, I think that's going to be taking a bite out of business investment going forward.
To what extent do you think that tariffs and tariff talks or tariff policy that gets enacted also revises things like the Fed and the FOMC's decisions to cut rates this year and the number of cuts that have even been kicked around coming into the start of 2025, where now you have some major banks kind of adjusting their own Fed rate cut forecasts amid some of how the economy might ingest what the impacts of tariffs are?
Yeah, I mean, the main thing that's affecting the Fed is that the employment output side of the mandate is doing perfectly fine, even with relatively high short-term rates. The inflation side of the mandate is still a bit off on the side of extra inflation. And so that combination, I think, would have caused the Fed to be very reluctant to cut rates in any scenario. But there's no doubt that the anticipation of future tariffs is an extra reason for the Fed to raise the bar on what it would take to resume rate cuts. The China tariffs will probably add about 0.1% to U.S. inflation. It'll be a one-time price level thing, but other tariffs would be more. And at a time when inflation is already elevated, I don't think you can afford to say, don't worry, this is just a one-time level effect. I'm going to look through it. The Fed would respond. So yeah, this is a thumb on the scale of higher interest rates right now.
Jason, is there a point where some of these proposed tariffs, or if it escalates to a certain extent, that it's going to revive some of the rate hike talk?
I think we are at roughly 2.5% inflation. If we get to 2.8, 2.9, 3.0, rate hikes are back on the table. One of the surest ways to get there would be something like a 10% across the board tariff on the entire world. bringing back the 25% on Canada and Mexico, any of those. But, we're also just, inflation's unpredictable. It bounces around. So my 2.5 estimate is off a little bit. Absolutely. I think rate hikes are on the table for this year, but with still a relatively high bar to move in either direction, probably a higher bar to move in the rate hike direction, but not an insurmountable bar.
As you think about the Fed's dual policy mandate, of course, we've talked a lot about the inflation side, but also you mentioned the employment side a moment ago here. And we do know that there are some new efforts within the administration to really prioritize what they're calling this Department of Government Efficiency, DOGE, and just that focal point around efficiency, even offering workers the ability to take severance essentially for months, and how that might show up in the economy. How are you kind of running the calculus around that, if there will be a needle-moving impact one way or the other?
I don't think DOGE is going to move any macroeconomic needles. I believe that it was 20,000 federal employees that have taken that offer so far. Maybe some more will. Regardless, they're actually going to be on the payroll through the end of September. They're going to be employed, so you won't even see that in the data. And when I look at the daily Treasury statement, which shows every single day how much the Treasury is spending, you do see things like USAID basically going down to zero. But you look at the aggregate number, the moves have been imperceptible since President Trump has come into office. To really change the fiscal direction we're on, we'll take laws from Congress, and I think it's an open question that whether those laws are likely to increase the deficit, which I think is actually the most likely, or decrease the deficit.
Jason, what are the right tools that should be enacted by the administration? If tariffs isn't the right way to go, we also have the tax cuts. Obviously, they're hoping that some of the revenue from tariffs is going to offset some of the lost revenue from tax cuts. But when you take a look at some of the slashing that's being done inside the government, what do you think the better approach is at this point?
It's to take a deep breath. I know they want to move quickly and they want to move ambitiously, and there's a part of me that applauds that. Take a deep breath, spend 2 months, come out with a budget and say, look, here are the different areas where the government's spending too much, where we can get something just as good for less money, or where we're getting something that's just not worth it, so we can cut it out. Have that go through the process in Congress and put a lot of pressure on Congress to do something. I think that has always historically worked better in the United States when you're putting everything on the table. So you're willing to raise taxes and cut spending, make it a bargain, bring all sides together. This is very, very far from the paradigm we're in now, but it's the one that Ronald Reagan used, that the first President Bush used, that you've seen conservative governments in the UK use. Put everything, including revenue, on the table. We have a big budget issue. Need to do a lot to deal with it.
All right, Jason Furman, always great to get your insight. Really appreciate you taking the time this morning.
Thank you.